Everyone, this is our cyber attacks coverage and policy updates webinar conversation with Jeffrey Smith, owner of Cyber Risk Underwriters. He is a veteran within the cybersecurity insurance space. He's here to talk to us today about some of the changes and challenges that we've seen around cyber risk insurance. For a lot of the folks that are going to be listening today, I'm sure you've seen, changes to coverage requirements or, various demands made about staying in compliance with some of the new rules and new changes that have come from cyber insurance providers. So this discussion is going to go over some of the things that have changed to force this, I guess, change on you as well. But I'm Saeed with DOF Creations. I appreciate you joining us today, and I'll allow Jeffrey to introduce himself as well.
Hello, everybody. I'm Jeffrey Smith. My company is Cyber Risk Underwriters. We provide wholesale and retail broking services for mostly SME, small and middle market enterprises. And we also provide technology, errors and emissions insurance, and a few other miscellaneous coverages.
Okay. So Jeffrey, I think one thing I wanted to ask is, um, I've heard different people say different things about cyber insurance as it relates to cost and coverage payouts. Um, as we go through this today, can you kind of, as we'll go through those different things, I'll probably try to, bring it back into the conversation. But what are the things that are going to affect your policy costs? And then what are some of the reasons why, a provider may not pay? Because those are complaints I've heard from some people, but as we talk, those aren't things that you're necessarily seeing. So what might cause like those one-off situations? But as we have our discussion, I'll just bring that back into the conversation.
Okay, well, I mean, real quick, I can tell you that we haven't had a single claim, denied.
Mm-hmm.
The policies are, this is pretty much all we do. And so, our policies are always pretty tight. The only time that I've seen coverage denials are when the insured did not meet their obligations under the policy, or they misrepresented the risk in the application.
Okay.
And I've not seen those personally, but my understanding is, I think there have been a few, but they were a long time ago when the policy forms were in their infancy, and they've matured quite a bit. So I'm not really certain about, what denial of claims that other folks have seen. I think there may be some surprises on sublimits that folks didn't take the time. With their retail agent, with their insurance agent, I really encourage them to take the time to maybe 30 minutes and go over the policy with their agent, because a lot of them don't understand, particularly in this is a tough class we're about to talk about. So a lot of times there may be sublimits on the ransomware because MFA in place or other controls weren't in place to satisfy, that particular insurer. So that could be an issue. It could be a reporting issue. But again, I've not seen any denials on our book of business.
Gotcha. And as we're going into our introduction here, cyber insurance, of course, I think when we first started working together, cyber insurance was pretty important, but I think there were a lot of folks that were still debating whether or not it was a necessity. I think by the time we're sitting now in 2023, it feels like it's a necessity. If you're pretty much any business and you don't have cybersecurity insurance, or if you're any government entity and you don't have cybersecurity insurance, kind of seems like you're just playing with fire to an extent. Is that kind of where you see cyber risk insurance today?
I think I'll try to keep my comments more specific to municipal and public entity risks. I think that in this class, the take-up has been a lot slower. The take-up with the products has been a lot slower.
Okay.
And there's several reasons for that. Historically, there haven't been a lot of insurers who want to underwrite this class, and we'll get into that in a little bit more detail later on in our discussion. But I think the major issue was budget constraints with municipalities, and then understand that I went to Black Hat the first time in 2017, and we spent a lot of time putting on breakfast meetings with CISOs and IT vendors of all sizes and shapes. And the first few years, there was a big pushback from the IT vendor space, and I would get not the most favorable comments. And as time went on, I started to realize the issue was that a lot of the vendors and the CISOs were worried that either they were not going to sell as much product, or they wouldn't be perceived as critical in the organization if these companies just went and bought cyber insurance. The idea was, well, if they buy cyber insurance, they're not going to need us. And I think over time they've seen that it's primarily a services and risk financing mechanism. And so the take up has been, I think in 2017, 2018, maybe, I don't know, 30% of typical small to middle market enterprise businesses have it, and we're probably up to 65%. In terms of municipalities, I don't have a good number for that. I think the municipalities that have their property casualty insurance in the various pools, they'll have some level of coverage in those pools. It's usually not more than $1 million in coverage, and sometimes there are restrictions in those coverage that they wouldn't otherwise encounter in the marketplace.
Okay. And you mentioned municipalities. A customer we work with that you've helped us is a sheriff's office.
Mm-hmm.
We also do quite a bit of work in K-12.
Mm-hmm.
When you're talking about a class, is public sector a single class, or is each individual, space of education or K-12, college, law enforcement, or all of those separate classes?
Well, I think it falls under public entity risk. So I
Okay.
think all those classes fall under public entity risk, and they, to varying degrees, some like utilities are a lot more challenging and fewer players than others, because the impact of a of a cyber event is much more can be much more catastrophic. But
Mhm.
we lump all those under the public entity category.
Okay, gotcha. Um, so I guess as we go into, one of the first things that you wanted to discuss here today, the public entity risk profile. I
Hmm.
guess you mentioned like utilities and the risk there being different, and how challenging that can be. What does that risk profile mean to you as you're, looking at a new, I guess, a potential insured?
Sure. So I think in terms of a general risk profile for public entities, and I don't think this is going to be any surprise to the folks who are checking out this video. The just in last year, the number of attacks are up. Now that could just be a reporting issue.
Hmm.
So a lot of times these aren't reported, especially with the ones that can get away with not reporting it. But usually with municipalities or public entities, there's an obligation to report,
Hmm.
particularly if there are a bunch of individuals who need to be notified. If there
Hmm.
aren't individuals need to be notified, then they may not be as quick to report these. Um, these are high profile claims. I mean, I think everybody, City of Atlanta, there have been several counties in Florida and Georgia, and several townships in Florida, Georgia, and across the country. They've gotten hammered. A lot of public education groups have gotten hammered in various different ways.
Hmm.
Um, but they're high profile for the most part. They make I could probably do a search for the last 2 weeks and find something.
Hmm.
Find A through 12 who's some smart kid got on the website and posted, took over their website and posted some stuff people otherwise wouldn't want to see. So they have a tendency to be high profile. The frequency relative to the size, they also more high frequency, high severity, low frequency claims. So even though we talk about the frequency being up relative to other industries, the frequency isn't super high relative to the severity. So it may
Okay,
get fewer claims, but they're expensive, and that
gotcha.
has a lot to do with backup, backup habits, updating, patching, and things like that we'll talk about shortly.
It,
Um,
it's
big,
oh,
Go ahead.
Oh, I was saying, as you're mentioning kind of like the cost of the attack, or how big the attacks are in regard to impact. I was just reading something today from the DoD about zero trust, and they were talking about as one of their priorities in creating a certain cybersecurity standard is minimizing the blast radius. Being able to utilize resources to either catch a problem quickly, or if a problem occurs, like disaster recovery, making that process for recovery much more manageable. So it was funny that you mentioned that today, is how that goes into determining kind of how big a risk a particular class or type of entity might be.
Oh, absolutely. There was one product. We don't sell security products, but there was one that we've been working with. We've been discussing. Um, it's one of the coolest and I think most effective type of security. It's called Canary.
Oh
Uh,
yeah, yeah.
and it's, I don't know how much, it's relatively inexpensive. And as I understand it, and I'm not a security guy, they plant these little, not quite honeypots, but attractive keys and stuff that are available in the network. So the bad guys are immediately, that's the sexy bait. And so they go to that bait and then they're able to identify them and shut them out.
Mhm.
That's that's a real attractive sort of tool for cyber insurance companies, because they're concerned about dwell time. And if you can catch these guys up front with some sort of technique or tool like that, that could be a big deal.
Yeah.
Um, Getting back to the risk profile, we know budget challenges are always an issue. We know that they've been the public entity risk have been kind of latecomers to fundamental security controls. That's relative to other classes of business. Healthcare, for example, is one that I wouldn't say they're early adopters, but they've moved a bit faster because they have the regulatory exposure.
Mhm.
I think another real concern about this class is systemic exposures, and we've seen some of that. Either from a systemic exposure means that one group gets hacked and it affects, it spreads out and affects a lot of the people. So if one of these cities gets hacked, like Atlanta did a while back, it shuts down the police department, shuts down the courts. It shuts down a lot of things that impact a lot of people. The other thing that the other issue is we get a lot of submissions for excess coverage, because the state insurance pools that will offer some coverage through one or two insurers. Actually, I think the insurers in most cases will actually reinsure, so you may not see the
Mhm.
insurance name on it. Those are, in a lot of instances, really aren't adequate limits for the
Mhm.
average loss scenario for one of those entities. So hopefully that gives you an idea of the profile and some of the reasons why these are more difficult to underwrite than other classes of business.
Okay. Yeah, that makes sense. Because I mean, if like you say, in a city or a county, if there's 4 or 5 other entities that you could potentially be impacting with that, or you're the
Mhm,
county, maybe you share some resources with the school district could be potentially exposed to. Yeah, that's very different than, an SMB space or something like that.
mhm, mhm.
So this one covering most common claims, I will say the top two that you have here, we just saw this happen with a couple of school districts, I want to say last month. The state of Florida in particular saw a string of entities, government and education, get hit with the funds transfer fraud. I think they were targeting any public entity that had a construction project going on, and they were redirecting vendor funds from the appropriate vendor to whoever that bad actor was. So
Yeah,
that's very interesting. You have these top two.
yeah. The first two, the last two are kind of a subset, I guess, of the first two.
Hmm.
But ransomware and funds fraud are, you know, we'll talk in a minute about the different types of coverage, first party and third party. But these are both what we consider first party. These are
Hmm.
claims that the insured is going to pay out and don't, in a lot of cases, don't really affect third parties.
Okay.
And so it's probably 90% of the claims that we see, one of these two, and it varies by class. Like we do a lot of groups in the real estate sector now. I mean, at the risk of sounding a little cruel, the good news is that our policies cover stupidity, um, and the reason being is it's the funds transfer fraud is such an easy exposure to manage.
Hmm.
Yet a lot of times what happens is people just anytime there's a last minute change, in a wiring instruction, you just need to call and confirm
Mhm.
it, have a procedure in place. And so we see a lot of people just who just don't pay attention to it.
Yeah.
And so it's difficult. Some policies will have a restriction that there has to be a process in place. Um, and if they don't have those restrictions, if you miss one, that's what the insurance is for. But you really shouldn't miss one. But
Mhm.
ransomware is really the king. That the funds fraud transfer that we see on our book of business, they're usually under $1 million, because we work in that middle market space. The ransomware is the frequency on ransomware is much higher.
Mhm.
And then offshoots are the unauthorized release of PI or PHI.
Mhm.
And then the other thing we see is a lot of supply chain and vendor hacks. So we've had, I'd say probably 40% of the claims we've seen, our insured didn't get directly hacked. We've seen a couple with collection agents where, um, they've been hired by a billing company who's been hired by lab company, and then the collection agency gets hacked. They swim upstream to the billing company, and they swim upstream to the lab company.
Mhm.
So we've seen that, and there are a lot of different examples of that happen. So the supply chain and vendor hacks are also a big issue.
Yeah. And I mean that Target famously got breached that way. Their HVAC contractor was breached, and then I think they failed to revoke like the credentials that that contractor had for like a billing portal or something like that, and they
Mhm.
just piggybacked through that. So, um,
One other comment on the funds transfer fraud is that there are a few ways that can happen. I mean,
mhm.
the most common way is, and it can be really confusing because different policies have different descriptions. Some policies say funds transfer fraud, and then they'll have a separate category for computer fraud. They'll have a separate category for social engineering, um, fraudulent conveyance, fraudulent instruction. So they have different, categories. So it can be really confusing based upon the policy. Um, Basically, there are three different exposures. One is somebody gets in your machine, takes it over, sends out instructions, and nobody in the middle checks to see if those instructions are accurate. So that would be like we had one with one of our retail insurance agent clients where somebody put some spyware in a machine. It sat there for a while. Finally, somebody tapped into it. They knew by virtue of having the CEO's calendar
Mm.
that he was going to be out of the country during a certain period of time. So they waited till he was out of the country. They took over his credentials, sent an email to the accounts payable person, and said, "Hey, I need." I think they did two separate ones for about $60,000 each. I need $60,000 sent to this thing. It's an insurance company. Here's the wiring instructions, and I need it sent out today. And I'm not going to be available for the next 24 hours.
Mm.
And so that's when your funds are sent directly somewhere where they're not supposed to go. The second one is an interesting one. We call it some people call it invoice manipulation. It's basically when somebody sends out a phony, somebody gets in your system and sends out a phony invoice to one of your existing customers, and
Mm.
so the customer pays on the invoice, that you don't get the money, and then you go back to the customer and say, "Hey, you didn't pay me. You're late in paying me. What's up?" And they said, "No, we paid you. We
Mhm.
paid $100,000. That was required of your invoice, but it was a phony invoice." And so what
Mhm.
happens is, the customer's going to say, "Well, look, we paid it. It's your issue. We paid it." So um, the coverage for the invoice manipulation actually reimburses the insured for the monies that are no longer collectible. And the third type that's typically covered, you get usually the banks respond is if the banks get tricked into sending funds from your account. So usually that's going to be a bank exposure.
Mhm.
Hope that's helpful.
No, it is, and I think when you think of funds transfer fraud, you kind of just your definition of it grows as you hear new events in the news, and that's kind of the challenge with different cyber attacks. Is like as a non-technical people, will tend to hear something in the news and go, oh, okay, well, that's another thing I have to worry about. But for folks that are either on the front lines of this, like yourself, and working in the cyber insurance space, or for the IT directors, the IT teams that are in this, it's almost like you can't afford to be surprised by the new style of attack. Even if it's just making something in your head, you got to at least guess at a way somebody might try to approach you or might try to breach you or scam you, something like that, and just try to be constantly prepared and aware of stuff. And I think, we spend a lot of time talking about policy and procedure and how that needs to evolve over time with our customers. But a lot of these things are procedural, like the funds transfer fraud. If the company policy is, an amount over X dollars is to be paid out, there has to be a secondary review or a third review on it, something like that. And, that's kind of what you see is $250,000 was sent out to somebody, a fraudulent payment, but there was one person that's reviewing this. This one person is doing 1,000 things at one time.
That's
Was
correct.
anybody else looking to see, maybe Linda's in hour 10 of the day,
Mhm.
maybe somebody should come in and just look over her shoulder and help her out on this one and make sure she's all right. So,
Yeah.
that's just one of those things.
Yeah, I think a question for you is or do you provide training services, either phishing simulation or other training programs for your customers in terms of ransomware and also for social engineering?
We do. So we have two partners, both Fortinet and Nova4 provide phishing training, as far as the ransomware and social engineering for the funds and transfer fraud situation. That's more of a one-on-one engagement where we'll do with a customer and just kind of sit down with them and review policy overall, especially as we talk about incident response and attack response policies, and having a team in place to kind of help develop your initiatives, not just for when the emergency occurs, but what are the policies that we're going to put in place to hopefully prevent these events from occurring, or if they do occur, to try to make sure that we respond quickly and keep the damage, or as the DoD would say, the blast radius as small as possible, as small as possible. So, but yes, to the phishing training, yes, we do provide support in that.
Yeah, that's a really big deal. We've seen some terrific results, and our underwriters really like that that tool.
So in kind of following up on that, I think you're going to talk about it later, but since you just brought it up, is that something that can help to lower premium costs, or at the very least, if you're going through a renewal process, make sure that your premium cost doesn't spike up?
It's a big factor. I think depending on the size of the account, the size of the risk. For public entities with under a $50 million budget, um, you're not going to get. There's not going to be a requirement for phishing training.
Hmm.
There's not going to be. They're not going to be as strict on the MFA and things like that, depending on the market. Markets continue. We'll talk about the market in a second.
Hmm.
As you go higher up the budgets, the budget size, then they're going to get more persnickety, and then you're going to see more in-depth applications. They're going to see EDR. They're going to see, all these other things. They're going to want to see a
Hmm.
pretty significant, pretty high stack of security tools.
Uh, is
Um,
it is it possible in with some providers that they are being just as strict on even the smaller customers? Have you seen or heard of anything like that?
well, they scrutinize. So a lot of our, the way we do this is we usually access pricing through some portals.
Hmm.
So we'll access pricing with a handful of our markets through portals. So we basically go to the portal, we put in the information, and the quotes get spit out. If there is a security hang-up in the vulnerability scans,
Hmm.
then it'll get kicked to secondary review. Or with
Okay.
certain classes of business, they will only quote, outside of the portal, and
Hmm.
that's public entities, unless they're real small.
Hmm.
They're going to be required to be quoted by an underwriter,
Okay.
like a live breathing human being. Um,
Gotcha.
but that being said, we just recently, one of our markets, we've got a couple markets now that for risk up to 50 million, and this may include maybe a few types of public entities. They don't require any controls for, companies up to 50 million in revenues. They're,
Okay.
they're, they're trying to grab market share. So, it's this thing's come full circle in a short period of time.
Yeah, that is really interesting. That is really interesting, especially just some of the complaints that we hear from customers, just how strict folks are getting. It's interesting to hear that, like you're saying, now you have some companies coming in willing to just take any and all that come their way. So that's very,
Mhm.
very interesting.
Yeah,
Um,
not my
but
money.
Not mine either. Not mine either. You have key cyber vulnerabilities as your next talking point here. Can you go through some of these? And MFA is massive. We hear MFA all the time, but kind of patching as well. Just some of the small, simple things that you can do to try to just reduce your exposure just a little bit every day.
Sure. All the underwriters that we work with do vulnerability scans. Some do threat intelligence. Others go a lot more deep than the depth of their surveillance sort of underwriting tools
Hmm.
vary. They all do the vuln scans, and they'll pick up remote. They'll pick up exposed remote panels, and
Hmm.
that's a really big deal because if you have an exposed login panel, you're 60% more likely, to have a claim.
Hmm.
Um, so that's a big deal. So when they do the scan, if they pick that up, or if they pick up, some software that's out of date, or if they pick up any known vulnerabilities of CVE, they'll kick it back and either quote it with a contingency that you close that port, or we got at least one that will require the port to stay, will require the port to be hidden for at least 60 days before they'll reconsider it.
Hmm.
Um, the lack of MFA is a really big deal now, and so we have a couple markets on the smaller stuff that don't even ask the question, but most of the markets are coming around and asking about MFA for email access. They'll ask about MFA for remote access, and they'll ask about MFA for admin privilege.
Hmm.
And the more likely you are to have those, the more likely you're going to get better pricing, because that's a known. Um, they know how that impacts frequency of loss. That's easy.
Gotcha.
We talked about the phishing training. That's a great thing. Uh, Backup procedures are problematic when they're not, when they're not separated or isolated. We've seen a lot of, and also we've just seen a lot of claims where the backups just get queried by the hacking process. So
Yeah.
they'll sit in there. I'm not a security guy, but my understanding is they'll sit in there long enough to figure out how to get into the backups. And so you you have to have steps to have adequate separate backups that aren't connected to the network. That's a
Yeah.
big deal, because a big part of underwriting is, these policies, as we'll talk about in a second, cover loss of business income if they're shut down for a period of time as a result of an event.
Hmm.
So having the backups ready to go mitigates that exposure.
Yeah.
Now, we talked about lack of dual control in the wire transfers. Vendors, I think if there's one thing that most insureds do a poor job of, is qualifying the risk exposure, the risk profile of their vendors.
Hmm.
So when you have relationships with vendors, a lot of times you'll say, hey, if you're going to work with us, you have to have general liability insurance, property insurance, depending on what they're doing, professional malpractice insurance, stuff like that. We encourage them to add cyber insurance as a requirement for vendors to do business. They have to have a cyber insurance policy, and they need to be added as additional insured on the vendor
Hmm.
cyber insurance policy.
Yeah. That makes sense.
Yeah, so that gets kind of back to um, the vendors getting hacked. You get hacked through a vendor.
Yeah. And it's incredibly important too because, depending on the size of the vendor, that cyber insurance provider is also going to have them, jump through a couple of hoops. You may not necessarily know what questions to ask, but that insurance provider is going to make sure that they have at least a few things in place to hopefully reduce their overall risk as well, not just make sure if they cause a problem that you're going to get paid.
Yep.
And when you're talking about poor backup procedures, we're seeing a lot of improvements on the product side as far as like identifying and quarantining potentially corrupted backup files, monitoring access controls, all that type of stuff. But it's just surprising, that there's still, depending on the organization you speak to, some are very committed to utilizing backups and being very strict about, their frequency and everything. And then some folks you meet, they just say, well, we have this and that's good enough. And, that can kind of, it's just a very interesting that there are different approaches out there. So, it's
Yep.
just something that we see from time to time.
Yep. So, yeah, the marketplace has gotten real interesting. We went from, I don't know, 5 years ago, we could get, we used to joke we could get insurance quotes if you had a zip code and a pulse. Now it's a lot different. So the marketplace is changing. A few years ago, again, no pulse, pulse required. Then in 21 to late 21 through 22, the market went kind of nuts, and we were seeing increases of 50 to 75%.
Yeah.
And I think there was perceived, the loss ratios of the underwriters. There was some perception that the event, their frequency and severity were going up. And so then we turn around, at the beginning of this year, first quarter, and really the underwriters started to get really aggressive in the second quarter. So we're seeing, kind of an undoing of a lot of those price increases. So if the prices went up, 50 to 75% in 21 to 22, I can go out. We just renewed a average size, it's probably a 70 million budget municipal little town, and their premiums were 45,000. We through competition we were able to get it down to 23,000.
Oh, wow.
So by driving the competition, which is what our job is, we were able to get that price down. Again, 2 years ago, we only had one market who was willing to write it. They actually made some investments in their system, so it made it a much more attractive risk to a larger number of markets. So the prices are flattening. In terms of recommendation, get alternative quotes for your insurance. Go to, if you're working with a broker, ask the broker to go to 4 or 5 markets, even if you get declinations from those markets, and require them to show you the marketing results, require them to give you some sort of summary of the results side by side. So marketing is really important right now. Take a look at your limits and retentions. It may be a good time to increase your limits, because anytime a market for $1 million goes down, that means that the pricing for excess limits on top of that $1 million also go down. And there's also more significant competition for excess coverage. And it can also be a time to, if you've invested in your infrastructure, to increase your retention. And that gets back, that's a financial decision. To the extent that, you have a $10,000 deductible because that's what the market was willing to give you. But in reality, striking the check for $25,000 isn't a big issue. Consider moving that retention up. And then in terms of the underwriting, I think we touched on this a little bit. The larger the risk, the more scrutiny it's going to get. When a risk goes into, we're used to turn around in a few hours when we get quotes from the portal. Now the turnaround time is a little bit longer. We can probably still put 5 or 6 quotes out. In municipality, we can probably get 3 or 4 quotes out in 24, 48 hours, depending on the size and the experience. I mean, if they have losses in their background, that's gonna add some time, because there's an exhaustive process to go through to explain what happened and to explain what actions have been taken to prevent a similar occurrence from cropping back up. We talked about this a little bit before, the minimum security standards and the risk assessments, same thing. The MFA is really becoming, the leading indicator. It's becoming a real, it's a minimum requirement for a lot of markets, regardless of the size. Now, they'll still underwrite you, a lot of them, if you don't have it, but they're going to put some sort of, you're going to have some sort of coverage limitation. Either they won't provide, some of them, if you don't have MFA on email, they won't provide the social engineering coverage. We have a few, if you don't have it, they'll restrict that coverage. We have a few markets that if you don't have MFA, they will sublimit your ransomware coverage. So instead of getting $1 million, you might get $250. And seeing how that's your largest exposure, you don't want that to happen. You need full limits for that. And the risk assessments are becoming more sophisticated. So we ran one 2 days ago or 3 days ago for one of our insureds, and it showed a port was open, and we get these, we get alerts. Once a week I get a summary of alerts for different insureds from our underwriters, and so we follow up on those alerts. So if somebody opens up a port, we'll get an email. So we got an email, we followed up with the insured, and they were able to close that port. We ran the scan, and it was clean. So life was good again. One of the things that's happening in the marketplace now is that the industry, the cyber insurance industry, is taking a hard look at cyber war. Traditionally, war has been excluded from any type of insurance that you can consider buying. Because you can't underwrite, meaning you can't come up with frequency and severity estimates for war. So it can't be underwritten. Now there's some maritime coverage that can pick up some war exposure, but none of these policies can pick up war. And so the question has been, what about cyber war? So Lloyd's is the first market to come in, I think it was March, on all the renewing policies with Lloyd's, or you may not see Lloyd's on a policy, they may be behind the policy. They're putting in a cyber war exclusion, and basically what they want to exclude is if they feel the Chinese government funded Chinese hackers to hack the government grid or something, that's a catastrophic event, and probably in that event, whether or not there's even enough insurance out there to cover a claim like that, a catastrophic claim like that, is a question mark.
Yeah.
So the cyber war exclusion on the Lloyd's policies and a couple other where Lloyd's is in place, that would apply to Beasley, CFC, and a few other markets that are London-based. Wrongful collection and biometrics are becoming a big deal. So wrongful collection just being it mostly has to do with pixels. It mostly has to do with, we see a lot of healthcare accounts, where you go on the site and they collect information, from you, and you may not know it. So, without your consent, they're collecting information on you, and they may resell it. They can do whatever they want with it. So there have been some claims, some class actions that some lawyers are trying to get to stick, to hold folks accountable for this wrongful collection. And so we're starting to see some exclusions for that, with some additional information. Some of the insurers can pick up the pixels on their vulnerability scans.
Mm-hmm.
So tell us, hey, here's what we're seeing. We don't want to write this, or they need to fix this, or we're going to restrict coverage in some way, shape, or form. And then biometrics. There's always, so the policies are all going to have wrongful collection and biometrics sublimits. So now almost all of our carriers they may limit, wrongful collection and biometrics exposure to, let's say, $100,000. And the $100,000 isn't intended to be as much a coverage grant as it is an exclusion, because if they didn't have that, it's hard for an insurer to put an absolute exclusion on a policy for this. So what they do is they have a small coverage grant of $100,000, so they just know, hey, if it happens, there's $100,000, go away.
Yeah.
So it can be, we call it like it's almost like an exclusion. So those are the issues that they're, your customers are going to want to look out for.
Okay.
Mm-hmm.
And I know when we talk about this, I remember us doing some of these back in 2019, 2020, as we were trying to introduce people to cyber risk insurance and why it was valuable. And it's funny, I don't even really think about this anymore now, because I think we see it enough in the news where it's fairly understandable why it's valuable, but obviously this is still important for some folks.
Well, I hit on it real quick. The value proposition really is, I think, the the value proposition, in my view, it's certainly a financial risk transfer like any other insurance. And I think, people on the surface look at it like that, like it's, general liability insurance, a slip and fall. You're really thinking, well, we need somebody to pay that claim. We need somebody to
Mhm.
assume financial obligation. With this policy, it's more of a it's more of a product, and there's financial recovery is just one aspect of the product. And you understand this, that most companies, particularly I'd say companies under $1 billion even, but most of the companies that we work with would never know who to call if they came in the office one day and they were locked out of their computers. They wouldn't know
Mhm.
who to call, you know, and they don't understand what they need. They don't understand they need, really fast legal advice to let them know, what statutes are, apply to them in terms of reporting, what regulatory agencies, like let's say HIPAA, have, reporting requirements. They may not know somebody who's in the forensics business who can
Mhm.
get in there really fast within 24 hours and sort out what's happening. They probably don't know anybody in the remediation business, the public relations business. So these are all vetted services. So this is as big a part. It's we call it risk mitigation. So it's an event's happened, but what are you going to do to keep the cost down? And so they offer a package of pre-vetted, you know, third-party providers to help manage a claim. One thing I do want to say about claims, so that everybody really understands this and has the right expectations. When you have a property insurance claim, you're dealing with one person. You're
Mhm.
dealing with an adjuster. And so, you know where to go to. You don't have to talk to a bunch of different parties. You talk to the adjuster. He manages all the parties. With cyber insurance, these can be really frustrating claims.
Mhm.
And the best of responses can even create some frustration because, where you have one property adjuster with a fire loss, you could deal with a lawyer, a separate forensics, a separate remediation, separate public relations group, separate forensics accounting people. And so it can be really challenging. These claims can be challenging. So you want to get the insurer engaged as quickly as possible. And the good ones, our response is, within hours. We know
Yeah.
about it. We can get one of these lawyers, a regulatory lawyer, on the phone, with cyber expertise on the phone in a matter of hours. We can get computer forensics people dialed in with a matter of hours. So that's a really big part of the product. Um, the other part is, we talk a lot about vetting. A lot of insureds um, like the idea that they're having somebody from the outside of maybe their IT consultants, or whatever they're doing in house, kind of kick the tires on their risk and let them know, relative to others in their industry where they stand. And so,
Mhm.
whether they buy the insurance or not, they can get a risk assessment that will, most of them will gauge them, relative to their peers in terms of, what protection levels they have, and, what are their, are we seeing open ports, are we seeing patching issues, stuff like that.
Gotcha.
So in a nutshell, that's the value prop.
Yeah, and I think the validation and being able to rank yourself is also, we'll meet IT directors, and one of the things we try to do, like especially with like these webinars and some of the discussions we do with like different associations, is giving them little nuggets that, as an IT director, as somebody as a part of the IT team, you can take back to other stakeholders and say, this is why what I want to do is important, because sometimes the IT director doesn't necessarily have they don't necessarily have the time to go and sell their idea, but if they can get a couple of kind of sales bullet points, sometimes that can be the thing that gets greater buy-in. And if your whole organization isn't moving in one direction as it pertains to your security posture, your overall IT strategy, it's going to be really, really challenging to kind of stay safe and do the things you need to do. Because if everybody's touching your technology, everybody needs to at least be moving in a general direction with it too.
Well, a couple of our markets, I think at least two of them now, they provide, portals. They provide dashboards for their insureds. What I
Mm,
don't understand is the take up on these are so low. But I mean,
mm,
one of our markets provides a dashboard, and the insurer can go on there anytime they want and run assessments.
mm.
Have information on there about how to manage vendors. They can run assessments on some of their vendors. They can discharge if they get a security alert. They can discharge a security alert on the portal.
Oh, wow.
They
Okay.
tools on the portal that are really helpful. So there's some add-ons that can be valuable. We just don't see as many people taking advantage of them as we'd like.
Gotcha. Well, that's something I'm going to definitely want to take advantage of for our customers. Make sure, if they need a policy, I'm definitely going to direct them to stuff like that,
Mhm.
or just let them know it's out there. But
So,
again, product offering here.
yeah, so this goes into actually we're going to talk about the actual coverages. We talked about the services to panel vendors and security stuff, and I alluded to this earlier. There, I break the coverage out into first party stuff, first party coverage, which is your stuff,
Hmm.
records, your money, it's your stuff, coverage for your stuff. And then there's third party coverage, which are liability claims from third parties, whether they be
Hmm.
affected individuals, whether they be regulatory agencies. Um, and that's third party coverage. That's defense. Um, so that's how we break out the policies.
Gotcha.
So the examples of the first party remedies that are provided in the policy are the event response, notification, forensics, the PR, the credit monitoring, stuff like that. On the cybercrime, it's extortion, the funds fraud that we talked about, telecommunications fraud, phishing. Telecommunications fraud, real quick, it became a coverage a few years back, and it has to do mostly with crypto mining. When
Mm.
somebody goes in, it can be called utilities fraud. Somebody gets in your system and uses your cloud, to generate, tokens, things like
Okay.
that became an issue. In terms of business interruption, there's system interruption. There's coverage for if your system shuts down. It doesn't necessarily have to be due to an event. If it's an unscheduled shutdown, you can get coverage for lost income as a result of that. Dependent system interruption is when you depend on a third party and they go
Mm.
down. There's reputational damage. I haven't seen a claim payout on that because I think it'd be difficult. But the idea is if you can prove that you lost customers that aren't coming back based upon reputational damage, then there can be a recovery of lost income for that. Um, and then the data recovery, the cost to recover the data or recreate the data. And then the other stuff is going to be hardware. If you get bricked um, assets, then they'll replace the assets. Court attendance cost. If they want to put out a reward, they'll pay reward expenses. I talked about the crypto jacking. That's the utility fraud. And then claims preparation. That comes mostly. Those are accountants who come in and evaluate what your loss of income actually has been. And so they
Okay.
prepare that claim and then they submit it to the insurance company.
Okay.
And then the third party coverages are, it's legal defense and indemnity, security and privacy. We're talking about unauthorized release of, you know, personal health or personal identification information, anything assumed under contract. So if you take the exposure in a contract that you're going to provide, coverage, provide additional insured, status to one of your customers, they'll respond with that. Regulatory defense, includes, HIPAA and a lot of other ones. You have states now that have certain reporting requirements. Um, they'll cover fines and penalties to a certain extent, and basically it's anything that's insurable by law. So I haven't seen any run into punitive issues on any of these claims, but if it's insurable in that jurisdiction, then it's covered. The PCI DSS is not as big an issue anymore. I think because the systems have gotten sophisticated and people got smart about this. But if you're using an outside vendor and you get hacked and they lose money, the coverage is going to pick up to respond to them plus any fines and penalties that are in that agreement.
Mm.
and the multimedia liability. It's important to understand also that in terms of the events, it covers electronic files, but also covers paper files, oddly enough. But multimedia is going to be like libel and slander. It's going to be, using images and stuff on your website without permission, copyright, trademark, plagiarism, those sort of things. Mostly related to your marketing materials or, online content.
Okay.
And then real quick, in terms of having a claim, you come in, your computer's shut down, the insurer is going to respond with a breach coach who's going to be a lawyer, give you some legal advice, and then ideally help, corral some of these other vendors, the forensics. They're going to evaluate the coverage under the policy. Then in terms of managing the crisis, if you got to notify people, whether it's individually by snail mail or electronically, that covers that. Then you're going to have credit monitoring to the extent that that's a settlement that you offer people, the PR, and then the data recovery. So that's a short-term crisis. The long-term crisis is going to be, hey, we lost a bunch of income on this. We have brand damage. We have class actions and regulatory fines we're dealing with. Those will take time to develop. But so these claims can go on a couple of years. And ideally, no, most of them are settled, or discharged pretty quick. But these things can go on for a while if there's third parties involved or lost income involved. And then I think we've touched on the mitigation tools, the training. Some of our markets provide free phishing simulations. They'll watch your domain. They'll do the 24/7 network monitoring, which is, a big benefit. And we talked a little bit about those alerts. Patch management services, password management services, and then legal and PR security consulting. And for all of our markets, there's always going to be a security engineer available. So they can, if there's a general question or something crops up that you need to talk to the security engineer, then all of our underwriters have those resources available to their insureds.
And I think that's pretty big too, because even larger government entities, they're still pretty overwhelmed when you think about their total staff size compared to their workload. So you might have a 20-person staff, but if you really need 30 people or 40 people to manage your workload, being able to have someone you can call and just ask the question, because sometimes you don't have a free day to do 8 hours of research, and some questions do require all that.
Yeah, I think one of the things that we've seen is that, and I don't think this is news to anybody, that some public entity, risk are having a harder time attracting directors and officers because they're concerned about this cyber exposure, and they're concerned about personal liability that arise out of this. So that's an issue that have been it's been brought up to us in terms of the need for the coverage.
Yeah. And then we also see folks that are just struggling to compete when it comes to salary with private sector. That's that's a massive issue as it relates to public entities compared to private entities. Just not being able to match salaries.
Well, I haven't talked to a single individual who works with a public entity or municipality that is not, that is not doing 60 hours worth of work a week.
Yeah.
God bless them.
Yeah. Long days, long nights.
So I think we covered most of this.
Yeah. The credential monitoring is something that is pretty interesting, because I know I don't believe that we actually ended up working with them, but there was a school district that we referred you to. And I think you and them worked together. We actually didn't end up working with them as an IT vendor, but I think they went through one of your initial scans going through the application process and found that a couple of their credentials had been exposed. I think it was like on the dark web or something like that. So that the credential monitoring is something that I forgot that's available, but I've seen that in action before, and it's pretty impactful.
Yeah, I think in terms of these, I would say the two, from my experience, the two most important ones are the assessments and then the ongoing threat monitoring. So they're monitoring, they know the software used, and they know, some of the devices that they can see. So the extent that they're patching issues with those, they'll notify you immediately. To the extent that, like I said earlier, a port opens up that's exposed, they'll let you know immediately. So, those are the most valuable. So the, we have one or two of our markets have much more robust, threat monitoring and ongoing monitoring and risk assessments than others.
Hmm.
Uh, so, we always make sure to show, our insureds multiple options, and we qualify exactly which of these security services are included.
Gotcha. And when we look at cyber insurance requirements, I think you've hit on all this during, our discussion today. Um, but I think this is just a great reminder for those folks who are looking to kind of boil down one from an IT perspective, what do we need to do to reduce our risk overall? And two, what do we need to do to make sure that we're in compliance generally with, our cyber risk insurance providers so that we can maintain our coverage or that we're not getting a quote that's, sky high compared to what we were expecting. Well, Jeffrey, I appreciate you being with us today. I appreciate you going through, some of the changes that we've seen in the cyber risk insurance world, why those changes are coming. And I think more than anything, it boils down to what type of risk are you to an insurance provider and what are you doing to show that you're trying to reduce or mitigate that risk. And I think for all of us, just generally in IT, that's kind of what IT is now anyway. So I think it all makes sense. But I really appreciate you being with us today and being able to go through this with us, given your experience. It's very helpful. Thank you.
My pleasure. It's my pleasure. Let me know if you have any more questions. Happy to help.
Definitely. Thank you. And for those who might watch, Jeffrey's information is here on this page as well, cyberriskuw.com. It's Cyber Risk Underwriters. Their contact is here, and feel free to reach out to them if you have cyber risk insurance questions. Thank you.